loaded, most certainly. Yeah, I get it loaded. Just ride the way, if you ride the way, shawty ride the.
How to use Elliot Wave while scalping in either day trading, Forex, stocks, options. This all applies in the same form, but I'm going to be breaking down how I use Elliot Wave and how you guys can actually master certain things in Elliot Wave to become a scalper and to scalp like a pro. So let's go ahead and talk more about it. So in Elliot Wave, there's essentially a couple different things you guys should notate. Now in Elliot Wave theory, you guys might know what Elliot Wave is. You might not know what Elliot Wave is. Well, in this video, I'm just actually going to give you more of a strategy that you can use to boost your scalping skills if you are a scalper and you want to start using Elliot Wave. Now for me, why I personally believe Elliot Wave can be one of the best things to use is simply because it can actually help you determine how far out the market can go if it is in an impulsive wave known as an uptrend or a downtrend. It can also help you stop getting in these fake signals, like fake validation in the market, so you'll know exactly when to get in, when to get out. And also it help you kind of figure out when you can counter trend. Does it make sense for me to counter trend now in this wave? If so, I will be taking this counter trend move. So I use Elliot Wave for all of those different reasons, so it can help me establish a lot in the market. And honestly, having this definitely gives me very good signals, and also not on top of that, but it helps me with a high win ratio. So I'm gonna actually show you in a perfect world of what you can use Elliot Wave for. Now I'm just breaking a little segment of Elliot Wave because there's a lot more to Elliot Wave for those that do understand Elliot Wave. But just so you guys know, in Elliot Wave, you have something called a motive wave. A motive wave is only just an impulsive wave, which would be something like this. And an impulsive wave essentially has 5 legs inside of it. So let's say that you know this market is going up, and let's say that, or maybe you know market is going down. What that essentially means is there's actually 5 waves inside of that. If you were to scale on a smaller time frame, let's say you spot it on a daily, you scale on a 1 hour, you actually be noticing these pullbacks here, and then a move going back up and another pullback are the 5 waves that I'm mentioning. So now that you understand that you have a motive wave, the next thing that comes in play is what we call a corrective wave. Corrective waves can be pretty much what you guys might be familiar to, which is like your ascending triangle, descending triangle. But in Elliot Wave, they actually have a lot more, which kind of gets a little complex. I'm not going to talk about all of it. What I'm actually going to be talking about today is a zigzag. A zigzag is what we call an ABC move. Also in Elliot Wave terms, it is what we call a 5-3-5 move. So what does that essentially mean? Very simple. In a lot of my videos, if you aren't subscribed, do me one huge favor, make sure you subscribe. I talk about the ABC a lot, and a lot of people don't even really know that the ABC is actually based upon simple Elliot Wave. So, and it's all corrective waves. So if we look at this, this is what a zigzag looks like. A zigzag would be market going up, creating what we call an impulsive wave, and then pulling back, creating what we call a corrective wave, and then pulling up, creating what we call a impulsive wave. Inside of these impulsive waves, like I mentioned earlier, these are motive waves. A motive wave has how many legs? As I mentioned earlier, it has 5 legs inside of it. Inside of the very first zigzag, which is what we call leg A, it will have 5 waves inside of that. Leg C will also have 5 waves inside of that as well. And that is because leg A and leg C are impulsive. And then your B leg, which is the pullback, is supposed to have 3 waves inside of there, which would be something like this. So now that you understand that A has 5 waves, B has 3 waves, C has 5 waves, how the heck do I use this to my advantage to find these entries? Now, another thing that I do want to talk about is that I like to trade the beginning of an uptrend or the beginning of a downtrend known as a motive wave, known as an impulsive wave. So what does that mean? Very simple. I would rather, and this is for my counter trend traders, if you notice that you are already in the end of a trend, I am going to try to trade it up here for a sell to max out down here, and then get in a buy down here to max in for a buy for this C leg, if that makes sense. So now that I am pretty much trying to establish when the beginning of an impulsive wave will happen so I can ride the entire move all the way up, or I'm also trying to establish when will the end of the impulsive wave happen so I can counter trend that move to hopefully ride it down to some certain extent. We have corrective waves in the B leg. Now the B leg is supposed to be corrective wave. The A leg is supposed to be the uptrend. The B leg is supposed to be the corrective, the correction, which is the pullback, the retracement, the exhaustion, consolidation. All of that almost in the same sense. And then after that is done, you're supposed to get the C leg. So in the B leg, you can have a couple patterns looking like triangle patterns, which would be something like maybe something like this, ascending, descending triangle patterns. You might end up getting pennants, which would be something like this. You might end up getting what we call an expanding flat, which would be something like this. Now, typically, there's a lot more to this, but what I'm actually trying to get at is, guys, when you see these type of patterns, these are what we call continuation corrective patterns. All right, so then now what happens is every time market creates this type of wave pattern, what will happen is it will then break the trend of or the structure of this wave pattern to continue in the direction that it was before, and that's why they call it continuation patterns. Here's how we're going to figure this out. Every time market completes a impulsive move, when market is going down, let's just do this in a downtrend. When market is going down, you start the very first corrective leg when market heads up. So what does this mean? Very simple. If you notice market is going down, and let's say that you established that this was the end of the downtrend, what will happen is, and the way to establish that is you can use fib extension and fib points. That's what I use. But we're just talking about the Elliot Wave format in here. So now what will happen is you're going to get your very first pullback. That very first pullback is most likely the establish of a corrective pattern that is about to form. It's just like how I said in a lot of my videos where what happens is you're running a marathon for 3 miles. What's going to happen after that? You're going to get exhausted. So what's going to happen is price is going to consolidate. Price is going to range. Price is going to catch his breath to continue right back down. And that's basically what's happening. So let's say that you do get this very first initial wave. What will happen, or this very first initial pullback, what will happen is expect market to start to consolidate. Now, when market consolidates, like I said before, market can consolidate either three times in this whole corrective wave, or it can do it 5 times. 5 times usually establish a triangle pattern. 3 times usually establish your flats, your symmetricals, your pennants, all of that. So let's say that we notice market had hit our trend line twice at the top, and then let's just say it hit twice at the bottom. So we have what we call, we start from the top. So this would be 1 move, 2 move, and then 3 moves. Now that we established that, what we can then expect to happen is we can confirm by getting a double bottom, golfing candle, whatever you guys want to see, type of reaction you would need to see to know the sellers are in. And then you can actually now either sell it to entry here, sell it to this trend line, and or you can sell it by using the fib extension, which we talk about, and I'm gonna break that down a little bit, and then you can sell it to this level. Now usually what will happen is price can retrace off this level and then create another leg, which will then now be 5 waves, and then eventually will break down. So one way to prevent that is I simply say this: when market breaks the trend line, or whatever you guys are using to figure out market structure, you then want to wait on that to break, and then wait on another retest on a smaller scale. So let's say we're on a 1 hour time frame, and then we jump on a smaller time frame, and we wait on a 1 hour time frame for it to break out first. And then once it breaks out, we then, let's say, jump on a 15-minute. We need to see this exact same setup on a 15-minute, and then we can then enter in for that 1 hour move, which will be the fib points, which is these 2 levels here. If you're not interested in the Fibonacci, you can use previous zone levels. So if you notice that there was already a zone level somewhere around here or somewhere around here, you can just take it to those levels. Now that is pretty much how I trade. Now I'm gonna show you guys how this looks in a live market so you can see exactly what I'm talking about. All right, so I'm actually going to show you proof that this whole thing can work if you guys can master this. Now, I actually called out a limit order for Euro GBP, which was here. I said, guys, we're going to do a sell limit order if it hits this entry point, which it did. And I'm going to show you guys in a bit. Now, I had floating stop loss at that time because I didn't really know exactly where I wanted my stop loss to be at the time. And when I usually say floating, I just say have it like usually 20-25 pips away from the entry. But either way it goes, this is the opportunity that we had. Now, if we come here, this is the actual trade. So if, as you guys currently see right here, this was the entry that I called for Euro GBP, and then I had all of the TPs, which TP was here. This was one TP here. TP2 was this Fibonacci point right here, and the TP3 was this zone and this Fibonacci point right here. And we smashed all TPs, giving us about 130 pips or so like that off of this entire move. Now I'm gonna break this whole move down on why I said this was, why I was looking for this to be a potential sell to the downside. And this goes right back to what I was saying earlier with Elliot Wave. So as you guys see, we're in a 15-minute, by the way. We had a impulsive wave, which was all of this right here. Now, since we established that this is all impulsive, like I say, when market is coming down, you start your first corrective wave when market does its pull going up. So now I noticed that we had our first pull going up. Now, since I noticed that, I was like, it looks like we're going to start a bigger corrective pattern, because we have, for one, we had a very intense impulsive wave, motive wave, downtrend, right? So now I was like, all right, simple. What we're going to do is let me remove this ABC, because that's that zigzag that I was telling you guys earlier. At the time, I believe when I started this, or when I noticed this, I noticed that market was in this corrective wave potentially. Now, I always look at market in zigzags, ABC patterns. So I know that I am not going to sell this and expect it to come all the way down here off of this move right here, because I know that we have to complete a full cycle of a corrective pattern, which I mentioned earlier, which can either be 3 waves or 5 waves. And this is what I was saying even before in the beginning of the video. This is how I can almost get an idea of false signals and know exactly when to get in, when not to get in, and when to get out. So immediately what I first did was drew my fibs from this impulsive wave to the end of the impulsive wave to figure out when end of this corrective will happen. And then I officially had a line here at the time. So I was like, all right, well, all of this right here, this whole zone level is where I'm expecting all of this corrective to happen. We're going to go ahead and play it through. So as you guys see, it didn't fully come to my Fibonacci point, which is fine, and that happens. So at this time, let me go ahead and remove the fibs. I am now going to actually use this box as an example instead. So now, basically, I had said, well, guys, if price can come back to this level, because like I said earlier, I look at the B leg, which is the corrective wave, as one big zone level. So I was like, if we can come to this zone level, I am going to call out a sell at this time, and I did call out a sell limit order. If we hit this right over here, we're going to sell it, and that is exactly what happened. So then now, once that actually had established and hit, I immediately seen this as a big zigzag, or not a big zigzag, but yeah, it is a big zigzag, but I seen this as a big corrective pattern, because now it looks like this. We have what we call wave 1, leg 2, and leg 3. Sometimes what can happen is it can do leg 4 and then leg 5, and this is why I have put my very first TP right here, because I did not know if it was still going to bounce and do 5 legs. Now there is a way around this, and I'm gonna break that down now. Now for those that's still trying to learn this and not understand, still don't understand where I'm coming from, all you guys can do is wait on market to break this low. Simply break this low right here. Once market breaks this low, you then can jump on a smaller time frame. I'm already on the 15 minutes, so we're just gonna stay on this. And on 15 minute, you wait on the retest. Now the retest, this is a mistake that people make. The retest 9 times out of 10 might not come back to this zone level. It can possibly come a little further out, meaning that it can come here and then go down. Regardless, what I want you guys to do is, if you want to, if you're in a 15 minute, whatever time frame you're on, you want to scale down and look for that same wave pattern, and then you can get in for the sell. So let's go ahead and play this through. So for me, I'm already in the sell because I'm a little bit more advanced of understanding it. But guys, what happened was market broke structure. It broke structure here. So now we're just going to wait on the pullback, and now we're getting the pullback, And then now, I don't know if we can scale. Let's go in a 5 minute. Yes, we can. So now in a 5 minute, I am looking for the exact same thing, 3 waves to 5 waves. Now, all of this right here is impulsive, right? And then what was our first pullback? Our first pullback was this one right here. So we're going to mark this as our very first pullback. And then all of this right here is the correction. So market could do 2 things. Market could, one, create leg 1, leg 2, and leg 3, or it can be something like this. Either way it goes, we are going to be prepared for this move. We're just going to wait for it to break out of this low, and then we're going to take our sell. So as you see, this is exactly what happened. Market basically created this whole zigzag pattern again, which is an impulsive A leg, the B leg, and then a C leg. We got 1, 2, 3 waves inside of this corrective. So now you can either take your buy because you established that we have a double top, we got engulfing candles in there, and then now you can ride this trade all the way to your Fibonacci points, which I'm gonna draw right now from the beginning of this impulsive to the end of this correction. And then we can ride it to these points. Or if you didn't want to do that and you're not used to the fibs, you can just draw your zone levels. If you already have your zone levels, and you make sure you do them on a higher scale, and you can just ride it to these zone levels. And then that's simply what you would do. And as you see, market eventually hit. And that's what I was saying, that you guys can literally become a scalper at this by just using simple Elliot Wave. Now, this is exactly how I trade 24/7. I trade this with synthetic indices, you know, the boom crash, volatility. I trade this with crypto. I trade this with indices from US 30, NASDAQ 100. I trade this with Forex. So this all applies, and that's the reason why I love trading this, because I can use this in any market. Because the reason why this works with any market is because you're actually using the fundamentals of market structure and price action. So guys, I appreciate the love. I actually want you guys to also notate one more thing. If you guys are interested in signing up with the broker Offspring FX, make sure you use the link down below. You can get up to 15% a sign-on bonus. Make sure you click that link down below, and you guys will be able to start trading US 30 mini lots if you want to with US 30 with a small account. If you want to trade NASDAQ, you can do mini lots with a small account as well, or you can do crypto and Forex too. So make sure, and stocks. So make sure you guys sign up, use the link down below, and then get the whole process going. Other than that, guys, I appreciate the love and support. Your boy Solo, like always. Make sure you subscribe to this YouTube channel. See you guys in my next video. Peace.